Market is a sea of red. Obviously, there's some pre-profit taking in advance of the Feds coming out and doing whatever the Fed is going to do. Over in crypto, we see a lot of green. It's likely in response to the banking crisis that's been unfolding over the last couple of days. We are right in the middle of earnings season. A lot of you guys are riding the wave of earnings up and down. One of the companies that I got a ton of questions for actually reported yesterday, and that was SoFi, S-O-F-I. Yet again, they beat market expectations and they were rewarded by Wall Street by a sharp sell-off, leaving a lot of you guys, a lot of the shareholders going, man, what's going on? We thought for sure this thing might finally pop up above its $8 barrier, get us back into the $12 range. Now, I'm going to cover it for your guys' sake. I'm not in this, full disclosure. This is the Stocks with Josh show. Thank you guys always for hitting that like. If you're new to the page and you're looking for insight into these crazy markets, stock and crypto, predictions and charts, then hit the subscribe and the YouTube all notification bell. Watch out for the scammers in the comment section. There is a new offer for the Moomoo investment app. They're offering up to 20 free stocks for the month of May. This is a limited time offer. You can click on the link to get all of the details. You're gonna get free stock. You can start investing. But when you've got all that done, then you can come find a chat group that I host on the app called Stock Josh Fam. If you're a member of that chat, say hi, throw a heart in the comment. All right, let's go back in time a little bit and talk about the history of SoFi. We're gonna time travel here in the charts. On November of 2020, this thing launched at $10 a share, and within 2 months, it shot up 200%, reaching its all-time high of around $29. Over the next year, though, the price moved in a wide price range. Could look like distribution to some, rising and falling between $12 and $24, after which it ultimately entered into a decline phase, and for the first 6 months of 2022, it actually fell around 80%, all the way from the high of $24 down to the low right below $5. And for the rest of 2022 and for the first 4 months of 2023, it's been essentially moving sideways, possibly in an accumulation phase. $5 has served as the low of that range, $8 has served as the high. In the last year, though, SoFi has repeatedly beat their earnings expectations, but to the disappointment of the shareholders, the stock only responds by selling off, and it still remains within that range. If you go back and you look at the charts that you see every single time before earnings, SoFi tends to ramp up with positive expectation, only to sell off after they beat earnings. And it's not like this is a company that's struggling. The CEO actually continues to raise guidance, but the market just doesn't care. Is SoFi worth investing in, or should you expect more shareholder pain? I'm going to get into some fundamentals. I'm going to show you guys some things in the charts, and I think afterwards you're going to understand. SoFi is viewed by some as a growth stock because of its 40% year-over-year growth that it's been showing since it began. But others choose to simply see them as a large cap broke bank because it's sitting around $5 billion. This is not a small cap. I want to remind you guys that anything below $2 billion is a small cap, anything above is a large cap. But to get right to the point as to why SoFi is declining, it's first off declining because it's in the finance sector. It's falling in sympathy with the banks because of the perceived future risks like the coming credit crunch, shrinking deposits, loan defaults, and of course one of the big ones for SoFi has been them struggling with the student loans and government regulations. You know my opinion. Government always causes problems more than they solve them. But unlike the banks, these guys are actually doing the opposite of losing deposits. And then we saw in this last earnings, they actually gained deposits, a massive swing up for the size of their bank. They gained $2.7 billion in deposits, proving that the marketplace does not doubt them. They're actually gaining and not losing depositors. The balance sheet also shows me that SoFi has pretty good leadership and that at any other time, this would have a much higher valuation. But this is clearly not any other time. These are perilous times, especially for the banks. There's no bank optimism to be afforded to SoFi right now. And at this point, we've got to go into the charts to see exactly what they're saying. As I said before, SoFi has been range bound. For the last 12 months, it's been largely between $5 and $8. But if you look at it more carefully, you see that during that entire time, it's actually been making lower lows and lower highs. This means that it is in a confirmed bear trend. If you look closely, when it originally fell to $4.82, it actually made its way all the way up to $8.52 approximately. At that time, that was a 77% move. After that, it slowly moved back down, but this time to a lower low of $4.24. At that time, it gave the market a really nice bullish double bottom pattern, and it began to move back up towards the high of the range, but it came short of hitting that 850 range. It actually went only to $8.24. This was actually a higher percentage move up. It moved up around 96%, but ultimately it was a lower low and a lower high. In recent days, it moved to around the $6 range, right in the middle of that 8 high and that low 4 price. Earnings were good. The banks right now are bad, so we got serious volatile action. Some very big candles showing an epic battle between the bulls and the bears, with the bears finally winning the day. I think it only tipped into their favor because of the bearish banking event of this last week. A terrible time for SoFi to be reporting their earnings. And on that note, there's good and bad in the fundamentals and the technicals. I think that in some ways they're saying different things at the same time. On the positive for the fundamentals, they're slowly moving towards profitability. And at its current pace, it looks like that could be by the end of 2024. We're far away from the end of 2024. It looks like the fundamentals point to them being a leader in the finance sector, significantly outperforming their peers by creating double-digit growth. But the negative fundamental view is that we have to remember that they are not in profit, and that means that they're going to continue to dilute shareholders. Now, there are times and occasions when companies dilute shareholders and raise capital to achieve something from a business perspective regarding growth that causes the stock to go up in value. That's not what they're doing. They're diluting shares because they've got no cash, and they have to do that to keep the lights on to pay the bills.
Rent's due, phones due, Wi-Fi is due, the lights are due, somebody baby probably due, Scooby-Dooby-Doo.
Remember, this is a pre-profit company, and that is without a doubt the number one problem, and without a doubt it's the reason why the stock is going down and trending down and making new lows. In addition to all that, it did not help when management sold around $100 million worth of the stock at $5 average price in Q3 of 2022. That sent a very bad message to the people that have the best view, the inside view of the company. They're largely saying that $5 was near the top in their view, because people like to sell at the top, not the bottom. You know, if they thought this thing was going to $10, they would hold, they would wait, they'd find some other way, but they didn't. They sold at 5. Bad message to the market. And so if you look at all that, you look at the fundamentals and the technicals, we see very clearly that the bottom is not in yet. We're actually in search for the bottom. So I'm going to give you guys one of my easy technical game plans for SoFi. I like to make the charts easy. Above $5, bullish. Below $5, bearish. Above $5, I'd call it a buy. Below $5, it's unreasonably high risk for me. This is not a suggestion for you guys to buy, sell, or hold. Largely, support right now I see for SoFi is around $4.59. Beneath that, I think the next technical support would be $4.15. But remember, anything below $4.24 is in price low discovery. I think it's worth keeping them on the watch list. Matter of fact, very humorously, the other day my daughter called me up and she said, "Dad, have you heard of a company called SoFi? You might like their savings accounts." And I was like, "Yeah, babe, I've heard of SoFi." Her and her husband, they basically have zero debt, but they use the credit card offers to try to get the points so they can travel around. They live in Hawaii, and so they're always looking for points and ways to travel and come see family. All the new accounts I tend to open tend to be accounts that give them some sort of reward for signing up somebody new. Anyways, the bottom line that I took from that is that SoFi is winning the game of sending out a great message. They're getting that new audience. They're getting those new young users. They're not doing bad from a fundamental point of view. The problem is they're in a non-easy money environment. Matter of fact, I hope that this causes them to become a lean and strong and powerful company. And in the course of time, this could be an incredible turnaround story. But right now, I want to be 100% clear with you guys. The trend is telling us, and the dilution is telling us, the bottom is not in for SoFi. But from a positive perspective, every single time it creates a new low, let's say it gets down to $3.80 or $3.50, anything below $4, I think it's worth buying on the reversal, because this thing is moving almost 100% up to find the top of the range. It wouldn't surprise me if that pattern continues. I'm very likely going to be keeping it on my watch list, looking for it to make a new low. and I'm going to get in, take a little risk, and see if I can't make 100% on SoFi going forward. That's the way I'm going to be looking at it. It's definitely an interesting company. I think in the course of time, they're going to do great and have a great valuation and continue to grow. But right now, they're trying to get that kind of keep them bills paid like a lot of people out there. And as a result, they're not getting the benefit of the doubt from Wall Street. And perhaps you need to be careful giving them the benefit of the doubt as well. And having anything in your mind expecting them to go back to $12 anytime soon. I don't see them doing that. I would say in the middle of 2024, or maybe as early as the second quarter of 2024, we could begin to see them break out into the upside. I expect largely they're going to be range bound with a tendency to be moving down and further down, because that's what the markets have shown us for the last 12 months. I'd love to hear from you guys, because as I've said, I'm making this video for you. A lot of you asked me for my thoughts on SoFi. Let me know what you think of what I've shared today. If you agree or disagree, tell me in the comments section. Again, thank you for hitting the like. Subscribe if you enjoyed it and made it this far. As always, peace and blessings, my friends. Tomorrow should be a great day in the market. We'll do it together. See you then. Talk to you soon.